Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is the 8th of July. What time is it? 7:30 a.m. Eastern Standard Time. I want to talk to you about the Skew Index this morning. We're going to talk about Apple stock, but I think primarily I want to begin with the Skew Index. And I've taken a little bit of heat of late for maintaining the short positions on the NASDAQ 100 small position, a bigger short position on the small caps since March. And that trade has basically been in a holding pattern. The small caps have stopped going up. They haven't broken. I could have booked profits on that trade. I did not. It just remained in a trading range. And right now we're underwater on that trade as well as the NASDAQ 100 short. But we haven't added to those trades. But that may soon change. Excuse me. The Skew Index, I'm going to leave you with this. I'm going to go over this chart here in a moment. Skew Index, basically what it is, much like the VIX index, the Skew Index can be a proxy for investor sentiment and volatility. Dan Nathan this morning on Twitter posted this, or actually this is on the 2nd. I just saw it this morning. And he pointed out the extent in which the Skew has surpassed all prior records. And I said, you know what, let's follow up on this and take a look at how the Skew is looking relative to the S&P 500. I found some interesting data I want to share with you. Add to that, we have Chris Peruna off of NASDAQ. Oh, Jesus Christ. Sorry, folks. First cup of coffee. Off of Twitter, pointing out that the NASDAQ Composite, while it's been making new higher highs, the new highs levels have been dropping like a rock. So this is an important metric, and it kind of leads you to believe that you have far fewer stocks that are participating, driving this market up higher, vis-a-vis your NASDAQ 100 names driving the market up higher, where you have many other stocks that are lagging. So when you take a look at the Skew Index on a weekly time frame, and I have in blue the S&P 500, you can see that when you go back in time, the Skew generally peaks out prior to a sell-off on the S&P 500. Case in point, back here in January of 18, Skew peaked out. The following week, S&P 500 rolled over. Week of August the 13th, 2018, Skew peaked out, bearish reversal bar. Several weeks later, S&P 500 rolled over. Fast forward to present day, Skew peaked out 3 weeks ago. S&P 500 still looking strong. The however is that when you begin to take a look at the pre-market activity after yesterday's FOMC minute announcement, you're seeing the S&P 500 come under a tremendous amount of pressure. We're down in the pre-market 1.33% at last tick. This is a 4-hour chart. So while there's no doubt we have Fed accommodation that is going to try to keep this market moving up higher, right now we're seeing a bit of a divergence from what we've seen of late, where we've had a market on autopilot, yet now we're seeing pressure on equities. This is clearly a breakdown on the S&P 500. We had broken out above resistance. This was a beautiful breakout. And ultimately, we rolled over and we took out a prior low. Taking a look at the NASDAQ 100, of which we have a short position on, it is now down again 1.33%, much like the S&P 500. It too had broken out, and I warned about this the other day. It looks as though we are pressuring support. Sure enough, we broke support overnight, and now we are seeing a weak session. Do we close here? We don't know. Right? We don't know what Fed head's going to come out and jawbone the markets up higher. So we're keeping an open mind. Taking a look at the Russell 2000, of which we also have a short position on. This index hasn't moved really in earnest since early February. I mean, it's just been stuck in a trading range, and let's call it 2100 is your lower band of support, 2350 your upper band of resistance, and we've been stuck in that range for quite some time. We have a double top on this 4-hour chart, and now we've broken. This is as of this morning, or we are poised to break the lower band of support. And I believe we did break. The lows of 620 were 206.2. The low of this morning, two. 2203.8. So yeah, we broke to new lower lows this morning. We're oversold here on RSI, so we're probably going to get a counter trend rally here fairly soon. But technically, this should be a major concern for those who are bulls of the small caps, and what's putting pressure on the small caps, despite what the Federal Reserve statement was perceived as yesterday as being somewhat hawkish. They're gonna reduce their balance sheet earlier than what had been expected. The equity market did not imply that at all for the most part yesterday, but you are seeing the actual inverse this morning, where you're seeing the 10-year yield rise, the 10-year bond rise. That means that yields are moving lower. What do you read into that? Weak economic growth. That's what the markets are pricing in. This is what the bond market is telling us. Absent the support of the Federal Reserve, this economy is in a great deal of trouble. Danny Brown, good morning to you. Danny's comment: the reversal ingredients are present. Energy costs are going to impact earnings, no doubt. The DAX is leading the way. It's COVID. I'm not sure what you mean by COVID. Are they locking down again, or can you elaborate on that, please? I know that Germany is pounding the table for a stronger euro. That is going to pressure the dollar. I haven't taken a look at the dollar yet today. The dollar is rolling over here. We've broken support. 2 support levels this morning. Richard, good morning to you, pal. Let's take a look at the euro. Euro is up. Let's take a look at the Japanese yen. The yen is up. Strong. Very, very strong this morning. So it looks as though the dollar is finally coming under some serious pressure, and that should bode well for gold, which is up $12.30 the ounce. It looks as though we have attempted to break out of this trading range. This now becomes support. So gold behaving very, very well. I'll say this: gold has been shrugging off the strength in the U.S. dollar these past few days. It looks as though we had some gold traders out there anticipating weakness in the dollar. They front ran gold. It looks like they're accurate in their trade. Oh, the variant. I got you. Thanks, Danny. Yep. Arena of Idea Racing. I love that name. Good morning, and good morning to you. And I always appreciate your early morning commentary on the equity markets. Thank you very much. I enjoy giving it to you. Thanks for being here. So let's take a quick peek. We do have positions in the gold mining names. We're not seeing much of a response to the strength in gold on NUGT. We also own GDXJ. GDXJ, not much happening here either in the pre-market. It looks like the influence of equities are impacting the gold stocks as well, which is common. Silver this morning, which we are also positioned, is up a little over a third of a percentage point. Oil, energy stocks came under a lot of pressure yesterday, as did oil. And there's a very tight correlation between energy stocks and oil. This morning, though, it looks as though we're getting a reversal bar on this 4-hour chart. This bar should close at 9 a.m. Eastern Standard Time. But a reversal bar here. Watch energy stocks. Which are now coming off the low of the session. Not positive yet, as is oil. Let's take a quick peek at the banks. Banks are probably under pressure given the decline in yields. Yes. So what we want to do is take a look, and I went over this last night with members on Market Wrap. Take a look at the closing price action of the banks yesterday. Actually, let's go to yields first. This is the 10-year yield. I'm very skeptical of this rally in bonds this morning, because yields are becoming very oversold, therefore bonds becoming a bit overbought. And I'm not saying that the rally in bonds is over. I mean, yesterday was the first day in several months where the TLT closed above its, we'll come back to this, its 200-day moving average in quite some time. And for those wondering, why am I spending so much time since November the 5th on bonds? The stock market is really the dog that is wagged by the bond market's tail. Back to yields. You can see that we're trading down and below or into the third standard deviation Bollinger Band. This is going to get resolved with a dead cat bounce. Could be several days. It could be the end of the rally. We don't know, right? It's way too early to make a call, but this is certainly unsustainable. And we're going to get a rally in yields fairly soon. So we want to start looking at those names that do well when yields rise, at least for a trade. The banks primarily, maybe energy as long as oil catches a bid. And the transport sector did fairly well yesterday. Let's bring up Apple stock. And folks, we're going to be using for our analysis TrendSpider. And as you can see here, this just got added. They launched their mobile device yesterday, their mobile app. God damn it, they won't let me do it. It's really great functionality. So use the link below, 35% discount code, TrendSpider, automated technical analysis, Apple. Now, Apple is looking really, really good. There's a problem, though. I know Carter Worth was out there this morning or last night stating that Apple looked like a buy, and I don't disagree with him. This is a weekly chart. Apple looking very strong. We're at the highs of the week. I will point out that we are trading above the 2 standard deviation Bollinger Band. That does not mean it cannot go up higher. It probably will. We are at prior highs and therefore resistance. And when you pull back to a monthly chart, I mean, this is a beautiful, beautiful base from which to break out of. If we break out above resistance, where did we close last night? 144.89. We want to see it close above, what was this high? 145.09. And we're right there. Let's create an alert. As a matter of fact, we'll make the alert on a daily time frame. And what the algorithms are telling us is that there is a lot of upside room here for Apple stock. Now, this is a concern of mine. I'll point this out. All right, our alert is set. When you take a look at volume looks really, really good on Apple. So you have institutional accumulation, thumbs up. Where you get a bit concerned is that you have RSI trading above 80. This is a mega cap name. So this RSI is kind of unsustainable. It doesn't mean it can't break out and move up higher. It probably will. But what I'd ideally like to see here is a pullback on any breakout. Let's say we close above resistance, all-time highs, then we consolidate for a few days along this line. That'll take the pressure off of RSI, allowing it to hook back up, giving it more room. And the upside potential here for Apple stock is pretty darn good. Because if you pull back to a weekly chart, you can see here the automated trend lines. This is the algorithm identifying where the next resistance level may be. It's way up here, and this is rising. At current, let's say it's about $160 per share and rising. So Apple looking very attractive. Just watch that RSI. Danny Brown, 10 years at 1.25. Yeah, it's concerning to see the 10-year yield dropping like a rock. I mean, it's telling you, it's speaking volumes. Good morning, excellent analysis. Thank you very much for the comment. I'm trying to pronounce your name, Ank Crench. Okay. Danny Brown, Nasdaq serving up an evening star reversal pattern. I think that we're seeing a follow through to the downside this morning on that, assuming that we close there. Let's circle back really quick to how we're closing out the pre-market session. This is a 4-hour chart. Oh wow, we're resuming the move lower here. We were down at last look 1.33% on the Nasdaq 100. Now down 1.42%. We bounced off of critical support this morning, and we're going to create an alert here because I want to know if we break to a new lower low and trade down below the support level. All right, so we're good to go there. S&Ps. Expect a bounce here. We have melted down a little bit further here, not much since our last look. Last look we were down 1 1/3. We're just beyond that now. Sorry about that. We are trading into the third standard deviation Bollinger Band. We can press down to the 42.65.50 mark and then bounce off of that support level. That's probably what's going to happen here. The question is, do we rally and put in a new lower high? That's the big question, because now this, after we've broken down to new lower lows, this now becomes resistance. Taking a look at the small caps. Small caps really melting down here. I mean, wow. We have certainly now broken down below the June 20th lows. We have a ways to go before we retest the lows of May the 13th, but it sure does look like that's probably where we're heading. So I would not catch a falling knife today with this market. Remember how we started off the commentary. If you're just checking in now, go back to the beginning of the video, watch the Skew Index. That's what we led off with, similar to the volatility index. It's a measure of sentiment, so you want to keep an eye on that. So let's take a look, see if I have any members chart requests. Sorry for the awkward silence. I do not have any today. All right, so with that, folks, thanks for joining in. Smash the like button. Don't forget TrendSpider, 35% off. Have a profitable trading day, and I'll talk to you soon. Be well.